Good evening everyone and welcome to Annual Markets webinar. Today is 30th of March 2016. As always, my name is Nenad and today I will show you why it's good to trade currency crosses. So as you probably know, currency crosses are very tradable. For example, yesterday we had a good GBP Australian dollar trade, and if you traded it you could have made like 50, 60 and even 80 pips. So very occasionally I will publish my minor cross analysis, especially when we have a strong trend and especially if I see the opportunity that you can also benefit from it. So before we begin, as always, our standard risk disclaimer explain that online education materials are available at Markets Estonia for a global audience. So take into consideration that information in this session is not suitable for everyone. If you want to get a corresponding information on charting conditions and any other detail, you should visit Admiral Markets Global, select your country of residence and contact an appropriate entity. Risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. And Admiral Markets UK Ltd takes no responsibility for information accuracy. This is solely my opinion and in no way it represents the actual suggestion for the trade. Okay, these are not MUK's opinions and the website in the video is not a .co.uk website but a globalnews.com website. Forex is risky business and this webinar is for informational and educational purposes only. Guys, download Admiral Markets Supreme Edition. If you do it, you will benefit from various tools, including correlation matrix. That is an excellent tool to actually follow the correlation table and different correlations between commodities, currency pairs, equities. And if your PC is having problems, you can always go and download and connect to WebTrader platform. Even if you are okay with your trading station, it's worth to check it how WebTrader can actually help you. And don't forget that you officially are trading with Best MT4 broker. The first question for today, Alif is asking about Aussie dollar and Australian dollar correlation. I will show that, Alif, in due time during this webinar, so stay tuned. Mikhailo is saying, greetings to Nenad and Admiral Markets team. Greetings to you, Mikhailo. Greetings to Croatia. So, yeah, here. Major crosses, minor crosses, exotic crosses, and advantages and disadvantages of trading minors and exotics. As you already know, I'm a big fan of trading crosses. I don't just trade currency, those major currency pairs. I also prefer to, from time to time, to trade different pairs. So guys, this is what I want to tell you, that many traders want to start trading day exactly as let's say gamblers, and they do not differentiate between majors, minors and exotics. To gamblers everything is the same. Put a trade, make a coin cost and whatever, like 50% of chance that you can win the trade, right? Well, one of the main difference between casinos and Forex trading is exactly that you don't need to do a coin toss. Why would you be 50% successful when you can make it up to 80%? So because of that reason, traders, I advise that traders first start to trade with majors. And before they start to trade, every single one of newbie traders needs to make a difference between majors, minors and exotics, because it's not the same. Majors are easier to trade, especially euro dollar, which has been the most traded currency. Well, definitely it's easier to trade than euro New Zealand, or let's say euro yen, right? It is a major cross, right? Euro dollar. But still, it is not, most of the time, it's not susceptible to erratic price movements, such as, for example, GBP yen or GBP New Zealand. Now, when you definitely understand the difference between major, minor, and exotic pair, you can start to trade it, and at least you can start to watch it to see how it behaves. I usually I use the expression, I say taming the beast, because some minors and exotics are beasts indeed. And you need to know how to tame it if you want to get the full potential out of it. For starters, currency to the left is called the base currency. Currency to the right is called the quote currency. So when we watch euro dollar or every other pair, it doesn't matter which one, remember, the base currency is the basis for the buy or the sell trade. It doesn't matter if it's GBP New Zealand, if it's dollar yen or whatever. This is base currency, this is quote currency, and this base currency is the basis for the buy or sell trade. When we sell euro, we expect dollar to go up and vice versa. When euro goes down, dollar goes up. So it's pretty much simple, and I guess that you know that, because webinar is being recorded and a lot of new traders will join us. I want to state the difference between it. Now, major crosses is basically what we are focused on most of the time. Major currency pairs all contain dollar on one side, either on the base side or the quote side. Remember that, okay? So major currency pairs all contain the dollar on one side. So it could be either base side or quote side. When you see USD, you know that there is a major pair. It doesn't matter if it's a base or quoted currency. Okay, I already mentioned that euro dollar is the most traded pair. Back in time when I started to trade, GBP dollar was the most traded pair. Now it's euro dollar. So major crosses are most frequently traded pairs in Forex market. Why do we like to trade major crosses? It's because the majors generally have the lowest spread and are most liquid, okay? So major pairs are most liquid, and usually the spread associated with major cross will be much better and tighter than associated to minor. So let's use the example, compare euro dollar to, let's say, GBP Swissy, okay? Well, of course, guys, if you trade with ECN broker, of course that you will find it very, very similar. For example, I have different accounts on other markets. I have also standard account, and it's good because you can trade also commodities and equities, and I have ECN account that is more suitable for trading currency pairs. So the thing is, when you trade currency pairs, it's better to trade it on ECN account. Of course, because sooner or later you will start at least watching minor crosses or exotic crosses. Very often I call it obscure crosses. Because when you get experienced, and when you get more experienced from each single day and each single trade, of course everything is experience. As you get more experience, you will definitely learn to appreciate the power and the potential that currency miners and exotic currency crosses can give us. And then you will probably switch to trade also those, both miners and exotic crosses. So minor crosses are called cross currency pairs or minor currency pairs. Miners are prone to higher volatility. They are also more risky, and the result is very often unpredictable movement. Because traders usually, now I'm not referring to you, because you are my team, all of you who are on webinar. So I refer to other traders who purchase $97 systems somewhere from the internet, and when they read the system, it says this system is suitable for euro dollar. Another system is suitable for 2 pairs. I don't get it. I really don't get it. To me, everything is the same. Is it GBP Swissy, CAD Yen, CAD Swissy, Aussie New Zealand, Euro Dollar, Dollar Yen? Everything is the same. Price action does not make any difference between currency pairs. Price action is the ultimate truth of Forex trading. There is no system. There is only price. So the thing what I don't understand is how come that one system is suitable for pound dollar trading and the same system is not suitable for euro dollar? How come? Both are major pairs. So something is wrong. Same for minor crosses. Of course, some systems are not made, tailored for trading miners, because as I already stated, miners really are not to be traded from the perspective of newbie traders. You need to understand correlations. You need to understand what moves those markets, and you need to understand the logic behind minor crosses. Back in time, now Alif, this is the time when I will answer your question. You're asking, is it like if we trade Aussie Yen and it's bullish, that means Aussie dollar is up and dollar yen is down? Today, Alif, that is not the case. When I started to trade, there were indirect exchange rates. So you had currency, dollar, desired currency. Today, we have direct exchange rates. So Australian dollar and dollar is direct exchange rate. Now, don't be confused. There are correlations between pairs. Simple and effective correlations. I will get back to it. But today we have direct exchange rates. For example, back in time, if you wanted to trade pound yen, you needed to exchange pound dollar, and then you needed to go into pound yen, sorry, into dollar yen to get pound yen exchange rate. So pound dollar, dollar yen equals to pound yen. Today we have direct exchange rates. But correlations still exist, because not just that currency pairs are correlated. There is also a correlation in equities markets. I don't know if you read my analysis on dollar yen today, but my analysis, I will get to it, was referring to actually some correlation between different markets. And I will show you now. Just give me a second. I really want you to understand this because this is very, very important. Here. Okay. GBP is moving in opposite correlation to Australian dollar. Okay. No, this is not that. That was, yeah. This is also, there is also mention of correlation, but this is yesterday post when the pair, this was when I published the analysis and I stated if it breaks this level it will go here. It actually went here. And then it dropped again to POC and made like 50-60 pips of a spike. So yes, this is one example, but the other example is found on my technical analysis page. Okay, I'm not sure. Yeah, it was here. Sorry, it was dollar yen on Forex Street. Yeah, exclusive analysis on Forex Street. So there was some minor retracement during Asian market, which is not a surprise as dollar yen moves in good correlation with Nikkei index or Japanese 225. What usually happens to Nikkei is that the yen appreciates first, risk off, and then next day Nikkei gets hammered because yen is more expensive. It affects their export manufacturing sector in the Nikkei. This is correlation between Nikkei and dollar yen. You can find it by using correlation table from Admiral Markets. So dollar yen moves in correlation to Nikkei. And the analysis was clear. Okay, we should pay before ADP attention to 112 breakout, while a good ADP result could spike the price up to POC, where we could see another leg of selling. So what happened is there was not so bad, I can say good ADP release. The price went here to 69, almost 70, and now it's rejecting. Of course, if another spike to the POC happens, we could see another rejection because this one was a couple of pips below POC. But the thing is, it was very clear, and if you read the analysis how you should read it, okay, there was a potential for retracement, a counter trend opportunity, and now it's rejecting. So up and down, right? And that is basically the power of correlation between equities and currency pairs. So the most active crosses are derived for three major non-US dollar currencies: Euro, UK pound, and yen. Okay? So the most active crosses. Exotic currency pairs are made up of a major currency paired with a currency of an emerging economy. These pairs are not traded as often as majors or minors, and sometimes the cost of trading is higher. And yes, someone asked me about advantages. We will get to it, so don't worry. So these are exotic crosses. Now, if you open your correlation matrix, you can, by clicking here, you can add currency crosses, and on standard account you can add commodities and equities. Major crosses are here, and those are namely euro dollar, dollar yen, pound dollar, dollar CAD, dollar Swissy, Australian dollar, and New Zealand dollar. So those are major crosses. Now guys, if you're not sure, if you're still not sure which are major, minor, and exotic, pay attention now and snapshot the chart. So these are major crosses. Contrary to popular belief, there is more than 4 major crosses. Usually people are referring to 4 major crosses, but actually these are major crosses. What did we say at the beginning of the webinar? Everything that has dollar in either base or quote is the major. So these are majors. These are minor crosses. Euro GBP, Euro Swiss, Euro CAD, Euro AUD, Euro New Zealand Yen, Pound Yen, Swiss Yen, AUD Yen, New Zealand, and so on, right? So these are minor crosses. Pay attention, and if you're not sure, snapshot the chart, snapshot the screen. Okay, so minor crosses. See, usually GBP with Euro, Yen, Swissy, but those are still strong, and you should trade it, and be patient, and I will tell you why you should trade it. And these are exotic crosses, some of them. Euro, Turkish lira, dollar, Swedish crown, or how they call it, krona, Norwegian crown, dollar, South African rand, dollar, Singapore dollar. I like dollar, Singapore dollar cross. It's often very good to trade, and I did the analysis of it, I think, a couple of months ago. But still, it's not very popular to trade. So not many traders were interested to trade dollar, Singapore dollar. But why not? Why should always the analysis include the same pairs? Why should we always include Euro Yen, Pound Yen, when you can make also great money with trading Euro, Turkish lira, or let's say New Zealand Yen? Australian dollar Yen is tradable and very tradable in Asian market, during Asian market. Euro Yen also. Australian dollar, New Zealand dollar is also tradable, very tradable. But Euro dollar does not move much during Asian session. So you should, why wouldn't you trade, let's say, AUD Yen, New Zealand Yen, or let's say Euro New Zealand during Asian session, or Euro AUD, for example, or Australian dollar, New Zealand dollar. Alif is saying the problem spread is high. Yes, but sometimes indeed on standard account you can see a bit higher spread. But that is why you can also try to open an ECN account and trade it with a lower risk, let's say. Why not? Use a lower risk and try it. If you're not able to trade those minor crosses, then let's say on ODN, even on standard account, there is not a big spread. So why not to at least to try it? Because sometimes you will be much more better than if you trade, let's say, Australian dollar Yen than pound dollar. And I mean it really during Asian session. And now guys, remember what I was telling you during price action training school, and I'm still repeating it, and I will always be here to remind you. Hopefully, of course. Of course. The thing is, ODN moves along with equities. Most of the time, at least it's how it has been for the last couple of years and how it's now, in this moment. ODN moves perfectly with Nikkei, with ASX 200 during Asian session. Dollar yen also, guys. Dollar yen is completely in negative correlation to Nikkei index. And you can always confirm it in your correlation table. But that is general knowledge. Yen follows equities. Bullish equities, yen is going up. Bearish equities, yen is going down. Now the advantage of trading miners, and still my favorite miner is yen, is that also it can be traded during London session. DAX bullish, yen up. DAX bearish, yen down. Now it's not enough. We can also watch yen correlation to S&P 500. S&P 500 up, yen up, and so on. Bullish equities, yen long. Bearish equities, yen short. And really recently, I've been very, very fond of trading dollar yen. I'm still not keen enough to make the analysis because I need to be sure that you will be interested in yen pairs. Yes, I usually try to pick the best trending pair and give you the best possible explanation in my analysis, because you can always use my analysis to actually place and confirm your trade, right? Or a trend if you have your own good system that you believe in. But I would really love from time to time that I know that I receive a feedback that you actually want to take a look at Swiss yen analysis, more frequently yen or Euro New Zealand, because that is, I will take that into consideration, and usually there is a good trend on miners because they are strong, they move a lot. So if we spot a trend, it's a strong trend. And then I can publish the analysis and you can try to trade it. And that's good, guys. You need to try to do that. Relax. You're not supposed always to make money in Forex market. Try to make pips. Every pip is money, right? But some people trade with low accounts. It doesn't matter, guys. Don't be focused on money. Try to be focused on making pips. So that is why I say try to watch these pairs during different markets. Swiss yen, all yen pairs move during Asian market, Tokyo session. All euro, pound, and dollar pairs will move during London. All CAD pairs will move during dollar during a New York session. And of course, Australian dollar will move during Asian session. So why not take into consideration Aussie yen, Aussie New Zealand, Euro Aussie, GBP Aussie, New Zealand yen during Asian session, if you can stay awake. Okay? Now exotic crosses also, guys. Why not? Now before we move to live chart, so advantages of trading multiple pairs, there is a lot more chance to get into a good trade. You will notice very often that if, let's say, euro dollar moves like this, Euro New Zealand could move like this. Or if let's say dollar yen moves like this, because dollar yen is negatively correlated to Aussie yen, ODN will move like this. The range is better. You have a lot more chance to get into a good trade. Suppose that you know what you're doing. If your trading style is technically based, you may find good success over different pairs. There is also an opportunity for a liquid price action. In addition to increased opportunities for trade, minor crosses and exotic crosses will also provide liquid price action. So these pairs, as I said, are more volatile and provide higher chances for a quick entry and exit strategies for trading. You can easily see which pairs are moving well. Just open your chart and observe price action. And you won't be stuck in a range, usually. Or if it's a range, you will spot it because it's easy to spot. The range will be easily defined on minor crosses. It's big, usually bigger than from ages, and it moves faster. You can always pick up a trend. So if you see that there is a trend on euro dollar to the upside, open euro New Zealand, open a correlated pair to euro dollar. I will show you the trick and trade it. Of course, you will definitely get better understanding of currency flow because you won't be restricted to systems. I have a system and I will make money. No, you need to understand the currency flow. You need to understand why the price moves like that. By developing a better understanding of currency flow, you will also develop a better understanding of a fundamental reason. Your fundamental reasoning will get better. And what I wanted to show you as a little trick and tip is so-called basket trading. I will show you that on live chart just in a couple of more minutes. And of course, you can trade during multiple sessions. ODN can be traded during 3 sessions. All sessions, all major sessions are covered. London, New York, Tokyo, ODN. While let's say a euro dollar, I really don't see why you would trade euro dollar during Asian session. Why would you trade pound dollar during Asian? Well, the advantage, obvious, the advantage of minor cross, such as ODN, because I always say it's my favorite, but you can also go for pound yen. You can trade it during every single session. And that's good. That's great, actually. You will always have something to trade. There will always be some movement, right? But if you want to trade minor crosses, you need to have a good and proven method. It's either a system or price action. As I already said at the beginning of the webinar, price action is not susceptible to different Forex pairs. It's same for all. Price action is what the name implies, price action. So you can trade it. Of course, with using price action systems that are not clearly defined as naked systems, of course, you can also trade minor crosses and obscure crosses like exotics. So it can be also indicator-based system, but that is based on price action. For example, I will always mention HARP and EQ pivot points because those are price action systems. And Maybe you have your own system that gives you the opportunity to trade minors and obscure crosses. I recommend usage of trailing stop or so-called profit stop because minors can be volatile. Just watch the range and observe the range of GBP New Zealand or GBP Yen or GBP AUD. It's much higher than of Euro dollar or pound dollar or dollar yen. It's because minors move more than majors. But as with every, as with every single truth, there is also a lie. Every truth has its own lie. And the lie is that you can trade all of this without any fundamental knowledge. Well, that is simply a lie. If we say that you can trade minors and obscure crosses almost as easy as majors, that would be a lie, guys. I need to tell you that. Because you need to know the fundamentals. You cannot just have an average Joe system and say I will take odd yen trade or I will take pound yen trade. You will lose. I can guarantee you that. Because knowing the fundamentals behind minor crosses is crucial. That is why I always have webinars to educate you how you should trade minor crosses. It's not take a system and trade it. Minor crosses follow equities. And I mean, as I say, ODN is a perfect example. It follows the equities almost 100% of the time. So you need to understand the equities markets. If Fed's Yellen was dovish yesterday, you need to understand why equities went bullish. So equities went bullish and ODN from 84.60 went to 85.60 during London and New York session. 100 pips spike. Dovish Yellen pumped the equities and because of that ODN spiked. So understand the fundamental reasoning behind it. Nathan is asking, Nenad, my apologies, I got in late. Will there be a recording that I can access for review? Of course, Nathan. The recording will be available maybe 1 hour after the webinar or possibly tomorrow, but the latest is tomorrow. Maybe I will get to upload it just after the webinar. But yes, it will be uploaded and you will have the access to it later. So know the fundamentals before you start to trade minor crosses. Well, most of the time, if you want to take some trades during Asia session and you're London based, you need to stay awake. That is not so good, right? Because you will be tired to trade London session. Also, there is you need a good platform. I, of course, recommend Annual Markets because I trade with it. And you need it simply because you need correlation table, guys. Don't be fooled. Else you need to go through various websites. Correlation table that Admiral Markets team has developed is very accurate. And you should take advantage of it. You shouldn't go through other websites searching for it. I mean, I had to do it like 3 or 4 years ago when we didn't have the opportunity to use correlation table. Now you have the opportunity to use it and use it to your own advantage. And you need a low spread account. Okay? Professional or pro or ECN, whatever it's called, for minors. Much better than using it on other account types because you will have a higher spread. We should move on to live chart now. Few questions. Nathan, by the way, you are awesome. I listened to Heikenesh and Camarilla. They were very good. Thank you, Nathan. Thank you. So Nathan is saying that he enjoyed webinar about Heikenesh. I know a lot of people really like Heikenesh, and stay tuned, guys. You will see a surprise very soon on our website during April. So you will see what I have prepared for you. Nathan, where do we find the correlation tables on Admiral? Here you go, Nathan. If you go to your trader's room, you can download Admiral Market Supreme Edition. In Admiral Market Supreme Edition, you will find correlation matrix. One of my favorite tools from Supreme Edition. So go to your trader's room, download Admiral Market Supreme Edition and install it. Once you install it, you will see it on your platform like this. Demo traders will have the access limited to 30 days of usage, and traders who have the accounts with Admiral Markets will have the access fully. Guys, if you're still not sure how to open it or you have problems, just send me an email and I will send you a link how to open Admiral Market live account. Of course, by trading with Admiral Markets, you will receive the credits and benefits from me and Chris and Elite Currency, and you can use credits to actually purchase our systems, tools, and methods. And very soon we will be updating all our tools and we will be presenting new tools because our programmers are constantly doing on it. So by trading with Admiral Markets, you will receive credits from us and you can get our systems eventually for free, like some traders that really had a high trading volume and they received our tools for free. So you can exchange credits for our products. That is actually a great thing. And of course, the best of all it is that you are actually safe because Admiral Markets is regulated to the full extent. So MT4, yes, Ilya, MT4 Supreme Edition can be downloaded from your trader's room. But I said, if you're not a client of Admiral, you will be restricted to 30 days trial. So go for it, open an account and trade and use Admiral Market Supreme Edition. And the question was how to use correlation table. This is it. Just open correlation matrix here and you will be able to see it. For intraday trading, I recommend 1 hour 200 bar settings. And definitely, guys, it's very useful, as you can see, correlation if you want to do a basket trading. So let's say that I want to trade pound dollar. So I see that pound dollar is really in a strong trend and I want to take other pound crosses. So what I will do is I will go here, put GBP USD, press add here and save. So now I see pound dollar is moving 76%. This is strong correlation to Australian dollar. So they're moving in the same direction. But I want to take pound trade. So let's see. Pound Aussie plus 67. Look at this, guys. Pound Swiss plus 94. Pound yen plus 79. Pound CAD plus 59. What I would do is, if I see that pound dollar is moving to the north side and it has a strong trend to the upside, just for example, I would consider taking long positions on pound Aussie, pound Swissy, pound yen, and pound CAD, because pound dollar is roughly moving in the same direction with this, especially with pound Swissy. Pound dollar and pound Swissy, 94% strong correlation, they're moving in same direction. By using that, you will not be double exposed to dollar and you will be double exposed to pound, but it's safer than to be double exposed to dollar currency, especially if you see pending news for dollar. So that is a trick how you can use it. For example, you want to trade euro dollar with other pairs. What I would do is I would go here and just type euro. Let's say we have euro Audi, yeah, euro Audi in euro, let's say GBP, euro New Zealand, and so on. So I have it here. Let's see euro dollar, and look at this. Euro Audi minus 38. So no, if I was to take a long trade on euro dollar, I wouldn't take any long trade on euro dollar. But I would consider maybe euro GBP. Look at this, minus 71. Interesting. And look at this, euro New Zealand. Now it's negative correlation. So if I'm to take a euro dollar long, I would definitely consider taking euro New Zealand short. Yes, negative correlation. They're moving in opposite direction. And it's actually good because you can make a basket trade. And the good example here is really with pound dollar. As I said, you want to trade pound dollar, great. Great, guys. 67 correlation with pound Aussie, 94, so you can make a basket trade with pound and make huge amount of pips. And one of our traders from session recap named Alexander, he told me that he made 1,000 pips last month using my session recaps. It's because he used basket trading. So if he wanted to use my signal and, I say signal, it's not a good word, my analysis on pound dollar, and he sees that actually it's going in the desired direction, he would open basket of pound currencies and take multiple trades in the same direction. Pound, dollar, Swissy, yen, whatever. And remember, guys, pound Swissy and pound yen, pound Aussie will move faster compared to pound dollars because they're minor crosses. And Nathan is asking, can we have DEX? Yes, of course. You can have DEX index here. Here. I forgot to save it. Here. You can have DEX index. Sometimes you will need to refresh this, let's say for like this, or maybe sometimes it needs to be refreshed like this. Now, of course, DEX is not moving much because it's the end of day, but you can always find it here. If you're not seeing actually extra time frame, you can always go to M15 last 100 bars and watch the correlation. It's also suitable for intraday. I prefer H1. He says try euro, dollar, and Aussie Swissy. Let's see. They are minus 98. Let's see. Euro, Aussie, Swissy. You can do it like this. 100, 200 bars. Euro, dollar, Audi Swissie plus, no, Euro Audi, sorry, Euro Audi. Yes, minus 96. So very strong correlation, Nathan, indeed. So you see, if I would take some Audi pairs, I would definitely think about Euro Audi and Audi Swissie. So you are basically making a basket of a currency pair. And you can make huge amount of pips by trading minor crosses. Ilya, there is a sound. Ilya is saying no sound. There is a sound. I don't know, sound is okay. So, yes, Nathan, you can make one long and one short. Elmo is saying sound is good. So yes, guys, that's it. You can make different trades based on a basket. So it could be very, very useful. So guys, I hope that you enjoyed the webinar. If you have any questions, you can ask me now. And actually you can see how you can use correlation table. So let's see. Pound dollar, you see the movement on pound dollar. Now if you open, let's say, pound yen, you will see bigger movement compared to pound New Zealand because the range is higher. On GBP even more sometimes. Yesterday, the analysis from this spot to this spot 100 pips and from this spot to this spot 200 pips. So you will occasionally find huge movement. Look at this. Euro dollar up, Euro New Zealand down. Look. Negative correlation, but much higher than Euro dollar. It moves much faster than Euro dollar. So that is why you should use obscure crosses. You can make fantastic trades if you know what you're doing. So use it to your advantage. Use correlation table and try from time to time to make a basket trade, at least on demo account before you start to go live. That is my advice. Thank you. I don't see any questions. So thank you for listening, guys. I will be with you soon, as always. And don't forget that if anything is not clear, just ask me. I wish you a great trading week, rest of week, and talk to you soon. Cheers. Trade safe.